Welcome to the Net Wealth Nest podcast, the show that helps everyday people build real financial stability, starting from wherever you are. Whether you're working your way out of debt or just starting to save, we're here to help you grow your net wealth to your first big wealth milestone. Each episode, we break down the mindset shifts, practical tools, and real-life actions that can transform your financial future. Thanks for tuning in. Now let's get to work building your net wealth nest. Welcome to the Net Wealth Nest podcast. I'm your host, Jim LeBeff. Thanks for joining for another episode as we work to help you build your financial stability and grow your net wealth. On today's episode, we're going to look at paychecks. One of the most important things that people struggle to understand is how to read their paycheck. And typically they're getting paid either monthly or biweekly, or depending on where you work, sometimes weekly. It's important to understand that if this is your main source of income, how do you read how much you are taking home and why that number is what it is? Many people understand how much they get paid, maybe 15 or 20 bucks an hour, and how many hours they work each week, sometimes 20, 30, or maybe even 40 hours. But they really struggle to understand how much am I actually taking home and why is it so much different than when I do the math of how much I make versus how many hours I worked. There's a lot of deductions and paychecks and different things that can come out. So let's dive in and talk about some of them to help you better understand how your paycheck works and why you get paid, what you get paid after everything is taken out. The first thing I want you to think about is your gross pay versus your net pay. And this is really simple. Your gross pay is that number that when you multiply your hourly rate by how many hours you worked, that's how much money you actually made. So let's say you make $20 an hour and you worked 20 hours that week. You made $400 that week. That is your gross pay. That is what the company that you work for is paying you before any of the deductions, taxes, any of those things are taken out of your pay. Understanding that is great. Now, where most people fall into a trap is they assume that is their take-home pay or that's how they make their budgets. And that's just inaccurate after you start to take out things like your federal taxes, Social Security and Medicare, your state taxes. All those things add up and take away from your paycheck and what you really bring home. And that's the other half of it, the net pay. The net pay is the dollar amount that actually gets put in your bank, or when you cash the check, the actual money that you get, that is your net pay. What you can actually use to pay your bills, spend on other things, all of that. So understanding that your gross pay is what you actually make, but your net pay is what you're taking home after all of your obligations come out, mainly taxes. So let's talk about some of the things that might come out of your paycheck actually before taxes. And these are done in a way that actually lowers the liability of taxes that you owe the government. One of the most popular ones is a 401k contribution. If you are doing a standard 401k, that money comes out pre-tax and goes into a 401k account to be invested and hopefully grow over a long term. And that's why they call it a tax advantaged account, is because that money, when it's growing, you didn't pay taxes on it. And so it's allowed to grow tax deferred, where eventually when you retire, you'll have to pay taxes as you withdraw some of that money, but that money is growing with those tax dollars. And so you're getting a better rate of return, hopefully over the long term, with having extra money versus if you would have done it after tax, you'd have less money potentially. Other things that come out are typically around health and medical. And when I say that, I mean like your actual health insurance. So typically the government will allow corporations that provide medical insurance to deduct those fees. So let's say you have a monthly fee of $30 a month for your health insurance. That comes out pre-tax. The government just understands that you are paying for medical coverage so you can be safe and healthy. And so they're not going to tax you against that. And so those are a couple of examples of pre-tax deductions that make your paycheck smaller, but are potentially beneficial to you in the long term. Medical insurance or health insurance is definitely beneficial, especially if you need to use it. And if you're investing and saving in your 401k, that's a great way and the most common way that Americans build wealth over the long term. Now, let's talk a little bit about taxes. And this is going to be the biggest amount of money that comes out of your paycheck every time you get paid. And it's what most Americans know the least about. Now, in a previous episode, we did cover how to look at taxes and how federal taxes are broken down. And so if you're more interested in diving into some of those, explanations, I will link the episode in the show notes for you so that you can hop in and listen to that episode and understand more about the specific taxes. But today, we're just going to cover what those taxes are that are employer account and what to look for in your paycheck so that you understand what you are looking at when you see these deductions coming out. So the first one is going to be federal taxes, and that's always the biggest one. And that's what most people, when they think about taxes, they automatically relate to is their federal taxes. And that is done based on your W-4 and how much you are making, as well as any dependents or other types of income you might have. Again, if you want to know a little bit more about that, just refer to our taxes episode and you can learn more about how those different brackets work and those different things work for your W-4. So the next one on the list we'll talk about is Medicare, and that comes right out of your paycheck as well. And that might be labeled in a couple of different ways. It could say FICA Medicare or FICA Med. It also could just say MWT in some cases, but that is Medicare, and that is basically a social safety net for the United States where that helps pay for medical expenses of people in retirement age. 1.45% of your paycheck will go into that Medicare bucket. That is required to be taken out and put into the social safety net of Medicare. Your employer, just so you know, matches the other 1.45%. So actually 2.9% of what you are paid is actually going to Medicare, but your employer is required to give half of it and you are required to give the other half. The next one you'll probably see on there is Social Security. And most people know what that is. That is the money that once you hit retirement age, you can start to get a monthly paycheck from the government based on how much you made and how much you put in over the course of your working career to help you live and survive once you stop working. And so this could be labeled a couple of different ways on your pay stub as well. It could be FICA SS I've seen before. It could just say Social Security. It could also say OASDI, which is abbreviation for Social Security. It could also just say SOCSEC, again, Social Security, but that is brought out of your paycheck as well and is mandatory every time you get paid. Just like Medicare, Social Security is split up between the employer and the employee. So 6.2% of your paycheck goes to Social Security, and the employer is matching the other 6.2% as well. So a total of 12.4% is going into Social Security out of your paycheck, while you are only paying for 6% of that. The last one that's very common is going to be your state income tax, and every state has a different income tax, but that will show up on there. Some states do not. Florida and Texas, I believe, are the two, maybe Nevada are the 2 or 3 big states that do not have a state income tax, but most states do. And again, it varies, but that will be another line of taxes. And so when you add all those up, it's one of your biggest expenses is your tax bucket that is coming out of your paycheck, and the one that people struggle the most to understand. And that's why there's sometimes a lot of confusion and anxiety and even contempt, honestly, around taxes and how that money is taken out of your paycheck. But it is typically going towards social safety nets as well as to fund and run the government itself in both the federal as well as your local state. The next part that can get pulled out does depend on what you have signed yourself up for, but these are post-tax deductions. And these can be different things that show up on your paycheck after all the taxes have come out. So one big one is what's called a Roth 401k. So just like a regular 401k where you're putting money into an investment account to save for your long term and for retirement, the Roth is just simply a version where you put money in, but it's after tax money, meaning you're going to pay the taxes now and you're going to put that money in and let it grow with the intent that you will not pay taxes on what you put in. And depending on how you take out the money, you might not pay taxes even on the growth. Again, I will say there's caveats to that and see a tax planning professional for questions on that. But you can put that money in with the assumption that you will pay less or little or sometimes no taxes on that 401k account because it was money that was put in after your taxes were taken out, your normal income taxes in the moment. And so many people also use that type of account to grow their wealth long term. Certain types of insurance. So sometimes if you have certain types of disability or liability insurance, or even things like identity fraud insurance through your employer, those could also come out after your taxes are taken out. Unions typically collect dues to run their business and advocate for employees. And so if you are in a union, you're paying dues, more often than not, those union dues are being taken out after all the taxes are paid on your paycheck. The other thing to think about and how you might be reading your paycheck is if you have special types of pay where you might have additional lines on your paycheck. So most people on a standard W-2 paycheck will have an hourly rate, and that'll just show how much you make per hour and then how many hours you work, and it'll show the total for that. Simple math equation, right? Sometimes there are lines underneath that if you get things like bonuses, if you have overtime pay, or if you have commissions. And that can also affect how you're taxed. But you might see those show up in different lines, and different companies might allocate that in different ways. Some companies even provide stock benefits to employees. And so if you acquire some stock from the company that you work for, that might even be another line on your paycheck, as it's showing the amount of stock that was awarded to you. So it might show the amount of stock that you earned on that pay period on that line and how much that stock is worth. So the key here is just going over your paycheck and going over each line and just understanding a little bit better around what you're being paid. And then actually what's even the most important piece of it, what you're taking home. You also want to just make sure you're not signing up for things that you might not use. For example, if you're signing up for all sorts of extra types of insurance that might be taken out of your paycheck, you could talk to somebody on your HR team on, are those things you really need? Anywhere you can shore up the expenses that are being taken out of your paycheck and really determine if those are things you need, that's an important thing to go through. But understanding your paycheck is the first step. The other reason we wanted to cover this is most people do the easy math in their head, and then that gets them in trouble. And what I mean by that is they use their hourly rate and how many hours they work as how much money they're taking home. And that's just not the truth. There are a lot of taxes to be paid. And then there's also some of these other things, whether they be things for your 401k, health insurance, other costs that you might have signed up for as part of your benefits package that you need to account for and really understand what you're taking home. And it's why we always say that you should allocate your budget not based off of your gross pay, but you should be doing it off your net pay. And so understanding all the things that are in your paycheck will help you better understand why your net pay is what it is and have the ability to impact that if you need to long term. Hopefully this is helpful today. If it was, please leave us a review on your favorite podcast platform, or if you're watching us on YouTube, subscribe, like our video, ask questions. We use your questions to help build content for the future, and we're just trying to help you stabilize your financial lives. And then after we get you stable, we really just want to help you grow your net wealth. Signing off for Net Wealth Nest Podcast. I'm your host, Jim LaBeouf. Thanks, everybody. See you again. Net Wealth Nest LLC and Podcast is an educational platform committed to providing resources and information to empower individuals on their financial journey. Please note, we do not provide financial, tax, or investment advice. All financial decisions should be made in consultation with a qualified professional who understands your unique circumstances. Seeking personalized advice is a smart and necessary step before making any major financial commitments. Thanks so much for joining us today. If you found value in this episode, please like and subscribe to our YouTube channel, Net Wealth Nest, and leave us a review on your favorite podcast platform. We read every comment, and they help us improve and guide what topics we dive into next. And hey, if something you heard today resonated with you, don't keep it to yourself. Share it with a friend, a family member, a coworker, your barber, your barista, even a stranger in line. You never know who might need this message. Remember, building net wealth is a journey, but you don't have to do it alone. Stick with us, and together, let's grow your net wealth nest.